Welcome back, welcome back, welcome back. Hello, everyone. Happy New Year, Merry Christmas, all that good stuff. I hope your holidays were great. Now we got to get back to work. Okay, let's get to it. Let's get back to studying. Let's get back to grinding. Um, Actually placed a couple of trades during this week. I don't care what nobody tells me. They be like, don't trade during the and the last couple of weeks of the month, going into the year. Don't trade that first year, but what I can say, it definitely helped me jumpstart for what this year's going to be. Very great, very prosperous. Okay, I've been winning all my trades that I have placed this week. No loss this week, which was great. Okay. Oh my gosh, and y'all, my I just have to shout out to myself because my technical analysis have been on point. Okay, I have made so the platform that I am with, they let me do a Sunday market. Well, I didn't go to class Sunday. I went to class Monday. But I basically shared my charts and showed what I was expecting for the week. And then also every beginning of the month, every Friday at the beginning of the month, there is always something called NFP. And I wasn't scared of NFP this month, okay? Starting into this year. I had my analysis set, and let me tell you, that thing was on point. When y'all know how to trade, and y'all go back and watch this video again, be like, dang, okay, because I have to hype myself up, because who else gonna do it? Anyways, no drawdown, okay? All right. Alright, so let's get into it. Just going over a recap for those who do not know me, and those who are just starting with me. My name is Ramira. You can call me Mars, or I am Mira the Goddess on most of my platforms. Here, actually, YouTube, but you can also follow me on Facebook and Instagram as well. Either at Mira the Goddess, or Ramara, Ramara, B, or underscore B. You'll find me. You'll get to me. You'll find me. I'm not that. It's not that many Ramiras out here, okay? And if there is, I haven't met one yet. Anyways, but if your name is Ramira, I would love to meet you, okay? Because if you like me, then girl, we is out there. We is stoppable. Anyways, let's get back to the regular basics. So, I am Ramira. I am from Atlanta, well, from Decatur, Georgia, but I live here in Atlanta, Georgia now. I'm mother of 3 wonderful boys. I'm 28 years old, so I am young. So if you are young and you don't know what to do, or if you're trying to find your way, listen, if trading is not your thing, it will definitely come. Whatever that you're looking for will come to you. Don't stop, keep grinding. Also, if you are a mother who is looking for something at home, or where you don't have to take phone calls, let me tell you, trading is it. Okay, trading is it. You don't have to worry about nobody calling you and saying, hey, we hear your baby in the background on your phone calls. We ain't doing that no more. Okay, we talking about financial freedom. We talking about infinite infinite resources. Okay, all right, don't have me to talking all day, because I get into some stuff. Okay, I've been through some stuff, but we made it. We here. We global. All right. So for those who are joining me, I am a foreign exchange trader. I also have different businesses as well, but this one I just want to share with you guys. At this moment, all of this information is free to use. You can always review my live recordings. You can always review my charts. Also, you can find them on YouTube as well, Mirror the Goddess. I'll post that information for you guys. What I am going over is the Candlestick Bible, trading Bible. This can be found free on the internet. Just type it in, or what you can do is, purchase it if you want to have a physical copy. By all means, you can, or you can also print it out. When I first started learning how to trade, and I first started learning about the trading Bible, I have to shout out to Coach Max, because she was the one who actually brought this. I have to give credit where credit is due. She did not bring me into trading, but she did help me with the resources and on how to trade. I did have to do the training and the hard work myself, and studying and preparing myself. But if you have no way to go, she definitely did help me. So I gotta give shots out to her. So if she does see that, girl, you was the best. Alright, so okay, the Candlestick Bible. Last year, what we were talking about, it's a new year. Okay, then 2023. Who else is still putting 2022 in their paperwork? I was at the doctor today, still writing 2022. Had to scratch it out. But Candlestick Bible, we have went over basically on how to become the most successful trader in history. Before we go into any technical analysis, before we go into any deep diving on what tools you should use, if you're going to use any EMAs, all that good stuff, I think this may be a great start for people who knows a little bit about Forex and how it works, but don't know really about how to actually trade it. I think this is one of the best things that you can have, so you can be able to see a clear market. So you can be able to see a clear market, not just only in the Forex, guys, in different markets as well, stock market, crypto market as well. The candlesticks can be very versatile in different markets. So I think that this is a very powerful book to read, to go over, to analyze, to study. Let this be your not your actual Bible, but your next thing to your Bible. Okay, you got your Bible, and then you got your other Bible. This is the other Bible that you need. All right. So we went over the introduction, the overview, the history of the candlesticks, what is the candlesticks, and we went over our patterns as well. Oh, hold on, let me. So the patterns that we did go over: engulfing, bar candlesticks, doji, dragonfly, gravestone doji, morning star, evening star, hammer, shooting star. And also, before we ended our break, we did the Harami, and we also did I like this one because these are like a little bit more darker. Yeah, that's better. Okay, the Harami pattern, and also we did the tweezer tops and tweezer bottoms. So what I did for the ones who have been following me, I went into the market and showed them on how to identify. So yeah, I'm not gonna make this long. So what I'm gonna talk about today, we're gonna do this quick exercise that I want us to do, see what we if our knowledge is good, and then also we're gonna go into market structure. Okay, market structure and how to trade the trading markets. Okay, these are the only two that we're gonna go into, because this, oh my gosh, I think I may have to do just the support and resistance by itself, but I'll take more into detail with that. All right, so let's jump into the exercise. All right, so here has the candlestick pattern exercise. If you, let me try to turn this down. It says, I think that you get some information about Japanese candlesticks. You know the autonomy of candlesticks and the psychology behind the formation. Let's take this exercise test to test your knowledge and see if you still remember all of the candlesticks we talked about. So guys, if you have been studying throughout over the break, let's see if we can pass this. Okay. It says, look at the chart below and try to find the name of each candlestick number and the psychology behind its formation. Alright, so I don't want to scroll down anymore because I don't want to cheat. But this looks like a Harami pattern. Let me know that it's going to go bullish. Right? Okay, looks like it goes bullish. This is the tweezers. I always get this wrong because this is the tweezer tops or tweezer bottoms. This is the bullish indication though. So I think this is probably the tweezer bottoms. Let me double check. You can always scroll up, right? We can't just scroll down because I don't want us to scroll down. Yeah. Bullish, bearish. Yeah, so this is the tweezer bottom. Alright. Okay, this looks like a bullish engulfing, and it goes the previous. Of course, it's going bullish. Another bullish engulfing. To me, it goes bullish. Boom! Oh my gosh, it's a beautiful bullish engulfing. That's what I think it is. This looks like a smaller part of a bullish engulfing, but yet it still shows me bullish engulfing. And then this looks like a bearish harami. Let me know that we're going to sell. So let's take a look and see how we did. Okay, it says, if you can easily identify these candlestick patterns and you understand why they are formed, you're on the right path. Okay. It says, but if you still struggling to identify these patterns, you will have to start learning about them again till you feel like you mastered them. And there's nothing wrong with keep going over and reading and going back to your charts so you can identify. There's nothing wrong with that. Your goal is to master these candlesticks, so that way when you are in a market, it will become easy to you, and you won't have any. It's not saying you won't have any guesswork, because you want to have different technical analysis behind it, different tools to be able to use. But if we know what the psychology of these candlesticks mean, we can be like, okay, we're at so and so and so. Okay, we're at our the support level. We have that bullish harami pattern, and then it has. Oh, this is also like a morning star, and other things like that. Like, you want to have different technical analysis as well. So we want to notice if we can see this, and it looks like clear as day what's going on, what's happening, and it's easy to you. And then, hey, you know, when you do go into the markets, you can be able to easily identify them, and you have your other technical analysis with them, and then boom, you're making the money. The candlesticks are the money is in the candlesticks. Okay. It's like reading a book. Once you start learning how to read a book, yeah. Give me 1 second. Hello. Yes. Give me 1 second. I have to pause my sharing because I am live. I don't think I can end my live, but hey, whatever. I made a chicken salad. They're eating leftovers tonight. Yeah, I cooked some chicken strips. No, y'all can eat. Y'all just go out and eat. Just go eat. Hey, okay, life happens, guys. My son is out getting his hair done, and yeah, whatever. All right, so it says, but if you, I don't know how to pause or nothing, so like, I'll probably edit that. If not, hey, you see the real. This is real things that goes on in my life. Okay, and yes, it is a Friday, and they are eating leftovers. There's nothing wrong with leftovers. Okay, I've been cooking all week. I am, I am, I'm tired. All right. All right. But if you start struggling to identify these patterns, you will have to start learning about them again so you feel like you have mastered them. Like I said, nothing wrong with it. We want to train our eyes to see so that we could be able to see in the market. So let's see how we did. So it says here, let's try to answer the following questions concerning the candlestick patterns. So it said a bullish harami or the inside bar. Okay, says that formation candlestick pattern indicates the indecision in the market. In other words, the market was consolidating during the session. Okay, bullish tweezers. The market was trading up. Sellers tried to push the market lower, but the reaction of the buyers was more powerful. This pattern represents the battle between sellers and buyers to take control of the market. Okay. That's why they look like that. We have an engulfing bar. Sellers were engulfed by the buyers. That indicates the buyers are still willing to push the market higher. So that was that first engulfing bar. Letting us know we have a strong bullish. And then we have more engulfing bars continue with 4, 5, and 6. Still bullish here. And then it says 7, the harami pattern. This pattern shows us that the market enters into a consolidation phase during the session, so buyers and sellers are in decision period, and no one knows who's going to be in control of the market. I said sell. I mean, it's still a harami. I mean, it did go down. I would have got out here at this little doji thing, or maybe. I don't know. That's risky though. But yeah. So how did I do? I got them right? Right? Alright, it says let's take another exercise. Look at the chart below and try to figure out these candlestick patterns. Okay, so I see a bullish engulfing here. And what is this? Okay, this looks like is that the hammer? That goes up. Number 3 is a hammer. I'll be honest, I don't know what this is. But if we're looking at it, I'll be honest, I don't know what 2 is. I need to go back into the markets myself. But I can see that it's an indication of buyers. The buyers were strong. They pushed the market all the way back here to where it closed. Let me see if I can zoom in for you guys. I just want to zoom in. What is it? A pin bar, inverted pin bar. What's the name of that? Unless that's a harami, that small one, a baby harami. Okay, but let's look at okay, so that was the bearish pin bar. Let's see. So okay, this is that one. What's the name of this? A hammer pin bar. Okay. Okay, so we got a hammer, the bullish version. I think this may be a harami. Yeah, I think this may be harami. We have a bullish engulfing, and let's see. Ooh, okay. Oh wait, okay. All right, let's see what's going on here. Guys, as you can see, I did not go over this. Alright, so that first one, it says, of course, that's a bullish engulfing. As we can see, number 2 was a hammer. I don't know if that's pointing to this or this. I think that's pointing to this. And then it says a number 3 was a hammer, which is a large body, plus the smaller body, which is the baby harami pattern. So this is the large body with the baby. Oh wait, this is the baby. Okay, so this is the hammer. This is the baby. Okay. And then number 4 says a bullish engulfing, of course. Alright. Please, I want you to open your charts and do this homework over and over again. You will see that with screen time and practice, you'll be able to look at your charts and understand what the candlesticks tell you about the market. Don't worry about how to enter and exit the market for the moment. Take your time and try to master the candlestick patterns discussed in the previous chapters. This is good, guys. Please. I didn't say that. The man who wrote the book said this. Okay. Alright, it says in the next chapters, I will arm you with techniques that will help you identify the best entry and exit points based on candlestick patterns in combination with technical analysis. So he's gonna let us know how we gonna enter and how we gonna exit. It says, trust me, the price action strategies will turn you from a beginner trader who struggled to make money in the market into a profitable price action trader. I want to make this green. Alright, so let's go into market structure. So market structure is one of the most important skills that you would need as a trader. The important skill that you need as a trader is the ability to read the market structure. It is critical skill that will allow you to use the right price action strategies in the right market condition. You are not going to trade all the markets the same way. You need to study how the markets move and how traders behave in the market. The market structure is the study of the market behavior. The market structure is the study of the market behavior. Major key alert. And if you can master this skill, you will open your chart. When you open your chart, you will be able to answer these important questions. What the crowds are doing, who's in control of the market, buyers or sellers, what is the right time and place to enter or exit the market, and when you need to stay away. Okay, during your price action analysis, you will experience 3 types of markets: the trending markets, the ranging markets, and the choppy markets. In this chapter, you will learn how to identify every market and how to trade it. Alright, so we have those trending markets, okay? Trending markets are simply characterized by a repeating pattern of higher highs and higher low. And an uptrend market and lower high and lower low in a downtrend market. And it says, see the example below. Alright, so here's an example of a uptrend, higher highs and higher lows, all the hallmark of the uptrend. So higher high, higher low, higher high, higher low. You see this? Higher high, higher low, higher high, higher low, and then here's a higher high. And then it says, as you can see in the example above, the market is making series of higher highs and higher lows, which indicates that the market is uptrending, as we can clearly see. It says you don't need indicators to decide if it's bullish or bearish. Just a visual observation of price action is quite enough to get an idea about the market trend. You don't need indicators to decide if it's bullish or bearish. Just visual observation of price action is quite enough to get an idea about the market trend. Alright, so here we have, look at the example of a downtrend. It's going down. Lower high, lower low, lower high, lower low. I made another lower low, lower high, lower low, lower high, lower low. This reminds me of, I shouldn't say it. Period period but lower high, lower low, lower high, lower low. Okay. Alright, it says the example above shows bearish markets. As you can see, there are a series of higher highs and higher lows, and lower low, which indicates, and did I say that? Did I say lower high, lower low? Yeah. I'm over. Okay, indicate the an obvious downtrend. Trending markets are easily to identify. Don't try to complicate your analysis. Use your brain and see what the market is doing. Like, it's not hard. Okay. If it's doing series of higher highs and higher lows, it's simply an uptrend. Conversely, if the market series of lower highs and lower low, it's obviously a downtrend. So according to statistics, trends are estimated to occur 30% of the time. So while they are in motion, you got to know how to take advantage of them. To determine whether a market is trending or not, you have to use bigger time frames, such as 4-hour, the daily, or the weekly time frame. This is something good. Let's make this red. This means Dennis. Alright, never try to use smaller time frames to determine the market structure. Did I say I was going to do this one? Hold on, let me go back. It's page 54. Oh, yeah, because I was going to start with support and resistance. Okay, it says how to trade trending markets. Let's just make this yellow or something. Alright, it says if you can identify a trending market, it will be easy for you to trade it. If it's a bullish market, you will look for buying opportunities because you have to trade with the trend. And if the market is bearish, you have to look for a selling opportunity. But the question is, what is the right time to enter a trending market? That's the famous question everybody wants to know. Trending markets are characterized by two important moves. The first move is called the impulsive move, and the second one is called the retracement move. See the example below. Impulse. So this one is an uptrend market, and it says the impulse moves and retracement. So impulse, retracement, impulse move, retracement, impulse move, retracement, impulse move, retracement, impulse move. Okay, it says as you can see, the market is making higher highs and higher lows, which indicates a bullish market. If you see this market, you would think of buying. But as you can see, the market is making two different moves. The first move is an impulsive, and the second one is a pullback or a retracement move. Or corrective move. It says professional traders understand how trending markets move. They always buy at the beginning of an impulse move and take profits at the end. So that what they're saying is we can buy this impulsive move. That was our morning star letting us know we are buying. Okay, look at that impulse move. We got that doji, and which end up turning into a evening star. So which is that retracement. Okay, that doji is done. Here is another morning star. We could probably get in here, or we can get in here, and we ride that impulse move up. I'm going more into detail for you. I mean, like the pattern. Look at the patterns. Look at how it's repeating itself. Look at that hammer, right? Retracement. Okay. Here's that bullish. That bullish around me. It looks, or also it could be like a kind of a tweezer. Tweezer bottoms. Okay. Look. Impulse move. Boom, 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 and it continues. Where am I at? And take profits at the end. You want to think like a professional trader, not a retail trader. This is the reason why the market moves. The market makes an impulsive move in the direction of the trend and retraces before it makes another impulse move. If you're aware of how trending markets move, you will know that the best place to buy is at the beginning of an impulse move. Traders who buy an uptrend market at the beginning of a retracement move, they got caught by professional traders and they don't understand why the market hit their stop loss before moving in the predicted direction. And then, so basically what they were saying, like, if you buying from here, you're getting stopped out, and then you mad because it went the way. You're not that you want to know the market structure. Okay, we going up. You want to know about your price action, and then it tells you about we're going to learn about the enters and exits, but this is why you want to learn about market structure and how it works and how to actually identify it. It's really not hard though, just a visual. No extra tools needed. Alright, so here is that downward trend, impulsive move, retracement, impulsive move, retracement, impulsive move, retracement, and then here's the impulsive move. Okay, the illustration above shows a downtrend. As you can see, the best trading decision is to sell the market at the beginning of an impulse move. If you try to sell the retracement move, you will be trapped by professional traders and you will lose your trade. Now we know how to identify downtrends and uptrends and how to differentiate between an impulse move and a retracement move. This is very important for you as a price action trader to know. But the most important question is how to identify the beginning of the impulse move to enter the market in the right time with professional traders and avoid being trapped by retracement moves. There's that question we need to know. Alright, it says to predict the beginning of the impulse move in a trading market, you have to master drawing support and resistance levels. Wait, hold on. Okay, yeah. Support and resistance levels. So, what are the support and resistance levels and how to draw them on our charts? This is what we will see in the next chapter. Okay. So, before we go, let's see if we can just identify some upward. Just basic. Okay. How long have I been on here? Okay, we're almost about done. I just want to show you guys some moves. It said that it's best to see on the 4 hour or the daily. So this is Euro USD or EU. Clearly, look at this. This is clearly a downtrend. Let me before all of this happens, but let me remove all of these. What's the Christmas food? Okay, let me see. I don't know what that Christmas mood is. Let's turn it off. Remove these drawings because we don't need them right now. And I think did I post that? I don't know. But let's go find something right quick. Let's find something that I haven't looked at. Alright, so let's identify these moves in the market. Alright, so we have our, well, if you want to be a little technical, let's just zoom in right here. So we have our impulsive move. We're going down, right? And we have our retracement. Excuse me, I'm so sorry. Then we have our, I will really consider this whole move as downward move, but here we have another impulsive move, retracement, and then we have one more impulsive move. Alright, and let's make these red. Well, we gotta make them another color. Let's just make them blue for our impulse moves. And then we're gonna make the retracements, like a pinkish, yellow color. I want a pretty color. Okay, that's fine. Alright, she retraced. She did a big retracement, actually. She retraced this whole move. That's why I was thinking that this is really just one big old move. But she retraced from this move here. Okay. The retracement. And then we continue down. Impulse. Move. Okay. Alright. Impulse. Blue. Let's make these blue. Because these are the impulse moves. And this is in a downtrend. Because, well, this was first a higher high. But then a higher low. This was a higher high. But then a higher low, lower high, lower low, lower high, lower low, and then retrace. But this is still considered a lower high because it's lower than this high. Okay. Lower low, lower high, lower low, lower high, and lower low. Alright, and then it did its retracement, then she kind of consolidated and all that good stuff. Alright, let's see if we can find it's right here. This visual, guys. No extra added work. So, it technically didn't break structure yet, but it actually broke structure here. So I'm going to use this as my impulse move. Well, it's actually a big impulse move up, but it was a little retracement here. Okay, and then the retrace back up. Impulse move up, and then it retraced. A little retracement. Let's make these pink. Get the pink. Alright, impulse move up, retracement. And she sold inside of that. This is the daily, guys. Blue. It's on blue. The reason why I am making these blue is because these are the moves and these are now the retracement. This inside that big old retracement itself, the market moves in cycles. Okay, guys. Oh my gosh, I can't wait to tell y'all more about that. So this is actually a big old retracement move of this bullish move here. But inside that retracement, we could have been able to keep we could have been able to get some pips going down. All right, and then because she kind of retraced it up, and then she came back down one more, and then she made her big old impulsive moves again, going bullish. Small one retracement here, but I'm trying to not dumb it down, but make you guys see. It's a small retracement here. I'm gonna fix them, and then that. Okay. Yeah, because that was a retracement of that, and then it made its impulse move. Okay, and then it broke that structure and continued to go bullish. Alright, so there we have it. I'm actually going to take 2 screenshots of this. Let's save this chart image like this. And then I'm also going to do the bearish version here. Okay. And then also I will yeah, I will also be posting publishing the link as well of what we went over today. And like I said, guys, this is on a daily time frame, so if people have went on a 4-hour time frame, I should have clipped it in replay mode so I can just hop back over there. It's 24 hours in a day. And how many 4 hours does the 24 hours give you? Okay. Can I go back? Oh yeah, where my stuff at? Lord, I can't find it. Hold on. Let's just do it like this, guys. Okay, that's better. Alright, let's go to our 4 hour. Look at y'all. I don't want to confuse y'all with that, so I'm actually going to remove that one. But it was like one of those, if you gotta be there to be there. But look, and then look at the smaller tracements within that daily. Okay. Alright, guys, so it is my time. I've been on here a little bit over 30 minutes. I'm sorry that it was a little bit longer. You had to hear some of the conversation that I have. Had normal day stuff. But yeah, if you guys have any questions or concerns, feel free to reach out to me. Let me go. So today we went over our market structure, how to trade market structure. We went over the candlestick pattern exercises. If you did not get any of those right, or if you got a couple of them wrong, it's definitely okay. I think I can say that hammer one kind of messed me up. Hammer Harami pattern that they had kind of threw me off, so I think I should go over myself to make sure that I can easily identify it. But always go back and study. Go back and train your eyes. Go back into the chart so you can see it clearly. That next one, it does have a couple pages for support and resistance, but we are going to talk about support and resistance next week. I did change our times to Friday Friday at 9 o'clock because let's just face it, we got things to do during the week, and I don't want to continue to say, hey, yeah, let's do Wednesday, and then my Wednesdays are booked. So I am specifically using this time, Friday, 9 p.m. Eastern Standard Time, to go live. I have got the baby, or getting the baby on actual bedtime, so I make sure that he's gonna be asleep during this time. If not, hey, you may hear in the background, but I want him to be asleep. Yeah, and then so we're gonna go over support and resistance. These may be a little bit easy. We may go over on how to trade trend lines and the Eurasian market for the next week. See how we're gonna break it up, and then we're gonna go into for the following year. It's not gonna take the whole year, guys, but for the following weeks, we're gonna get into the real nitty gritty. But we just started with the market structure. I want you guys to see and train your eyes on how the market structure actually is. This is a really, really good book. I do not know how I can stress this more and more for you guys, but please use this. Please, like, if you need to listen to it, I think they have audiobooks on it as well, so you can know the psychology behind them and what it does. This would definitely help change your lives. Yeah, you guys have a great day. Great new year. I hope your new year will be very prosperous and have a lot of abundance in it, and a lot of wealth and flow and different opportunities for you guys. Yeah, have a great day. Bye, and I will see you next week.